but this is how my chart looks like. Just one of you, please confirm that you can see my screen.
Yes, we can.
Awesome. By the way, we're coding our own indicator, so you don't have to buy this shit. Okay, we'll just we'll have it for free for you guys to use. Okay? But
That's cool.
yeah. All right. So let's see. So we're in power hour now. As usual, we'll go over our sweep strategy, what trades we took today, or we could have taken. But just want to make sure this is looking nice. Okay. Right. So let's go on the 5 minute and let's see this five stop here. But all right. So as always, we start and look by the way, look what the prices I just noticed. We just dumped NWG. I was gonna say this. This is why I was asking you, P Jones. Like, are we dumping the whole day or we just dumping starting to dump now? And the reason I was asking this is even though I haven't checked the chart the whole day, if we've been dumping the whole day, like both sessions, you can anticipate that the market is going to go to an NWG. It will not go, it wouldn't care about these lows, these lows, these lows, these lows. It would just run straight to NWG and it would probably end the day there. And you can see it ended here, right? So there's another one over here, but that is almost 90% of the time when you see the market just going straight direction and you're anticipating some kind of reversal here, but it doesn't, it just continue down, then it's going to go for NWG. If you have this off, you're going to be like, we took out this low, but it's still continuing down. We took out this low, we're still continue going down. Where else can we go? Like if you go all the way to the left, there's literally nothing, right? Even this low is taken. So always just have this indicator on. It's again, everything on here is free. Just toggle it on and off. Just see where we are, okay? So while you're here, you can be anticipating that the market is going to go to this NWG and it will bring it. It will bring the market there. Likewise, if we're bullish. Okay? So now let's start with our sweep strategy. So today we had a beautiful two setups, both shorts. All right. So starting from London, you guys know our sweep setup. It's always good because we have new people. Sweep of previous session, high or low, step 2, charge, step 3, FPG, for entry. Okay, so here we have London swept previous session high, Asia high, we did it right there. Step 2, charge, we got charge right there. Step 3, do you have an FPG? You have an FPG right there, and you can go ahead and put this right here, but I'm not going to draw them. You can go ahead and enter at that charge candle. So this is the sweep, charge the FPG right here. You can go ahead, put your stop loss. Oh god, I do 3 stops at the top. You're literally risking almost nothing, right? But yeah, it takes, and you can go for 2RR. And I recommend I don't care about RRs. Look, I said 2RRs. I don't care about the RR actually, not anymore. Like you sometimes you might see my trade being like this. This stop loss and my TP is like this. Okay, I don't care about RR because it's unrealistic. You cannot force the market to give you 2RR or 3RR. Like I want to make my trade go always double. I mean, that would be awesome if we can do that actually, Like it's actually what we all want, but we can't always get what we want, all right? You have to be logical with what the market is providing you, right? Sometimes you see the trades, for example, we check out this trade here, but it's going to look so illogical, but it is reasonable within the market boundaries. Okay, and I'll explain that in a second. But for London, as a general rule, if you want to trade any sweep setup in London, you're looking for 100 ticks, no more than that, okay? Because London doesn't expand more than 100 to 200 ticks, right? This whole range is not even 100 ticks, right? But in New York time, from here to here is 100 ticks, right? Just this much, just this little bit, and look how much just further, right? So from our entry, actually, from here you can see it's almost 800 ticks, 200 points. all right? But in London, the whole session is barely 282 ticks. And from your entry, you should always target 100 ticks and be content with that. Okay. So you entered here 100 ticks right there and call it not a day. Don't call it a day. Just call it a day for the session. Okay. So you do not want to trade longer in London for longer than 100 ticks. Okay. Because you can see at 100 ticks, usually it gives a bounce. Like it's nothing to do algorithmically, but it's just range bound, if you get what I mean, right? It's just like standard deviations. The algorithm is allowed to push the prices out of the range all the way to 2 to 2.5 standard deviations, and then probably a reversal setup will happen there. The reason is because it wants to keep price under control, right? When we say the market is controlled, when the market is manipulated, well, these stuff are being utilized to control such market or to utilize such control mechanisms. And we'll get into that again in a second. But that was a beautiful trade, giving you 100 ticks. 100 ticks is $500 with one mini, and you can see we have zero drawdown. Okay, that's one. Two, if you took two minis, that's 1K. Or if you took 5 micros, that's $250, right? If you're on TOPSTEP, you have to get at least $200 winning day minimum to be eligible as a winning day, so you can go ahead and get your payout paid, right? So this here would have gave you $500, so you can just do 50 ticks with one mini or micros, and this is what I've been doing, and start 100 ticks. That will give you $250, so $50 more than you actually need. Regardless, let's continue and not waste more time, because the majority of you are familiar with this. Now, London, what did it do? Now we took our trade. Now we wait for London to sweep previous session low or the high, okay? Well, what did it do? It didn't sweep the low. It went back up above Asian high. Nice. Now we did step one. We can repeat the same step. Step two, Chosh. We didn't get any Chosh. FEG, we didn't get any FEG. And London closed, as you guys see, exactly 8 a.m. All right. So at this point, Nuke AM session has opened, and it comes bearing some beautiful gifts. So as you can see, our setup is pretty much same steps every single time. Use these to get in a trade, and then you can use whatever model ICT tool, whatever model, I don't know, you see on the internet regarding supply and demand, spawn resistance, on all that other, don't want to say nonsense, but all the other strategies will start to work almost 1,000%. For example, Legend Fox, he learned the sweep strategy, and then after we get a sweep of a session, so after you utilize the first step, which is sweep of previous session high and low, then he added indicators, yes, lagging indicators, and he's using it on the 1 minute and killing it. He's making 3-4K every single day, with like almost gonna pay for he's gonna pay 2 houses, 3 houses mortgages this week or something, right? He surpassed all of us, right? So you can use retail stuff so long you wait for at least the first step of this strategy. But I like to stay as much as I can the same. So this is how we continue, because it's reliable as it is. So now, Nuke AM, sweep of previous session high, done. London high has been swept in this candle, and you will get alerts, guys. The beauty about this strategy, you can get alerts for sweep, for Chosh, for FEG, or for the combo of all three of them at the same time. So, sweep of previous session high, step 2, Chosh, do we have a Chosh? We got Chosh right here. FEG, step 3, do we have an FEG? We have an FEG right here, and you take your trade right here, put your stop loss right at the highs, and you target 200 ticks. Okay. In New York, you're allowed to target up to 200 ticks. Of course, you can target much more than 200 ticks, but 200 ticks, more times than not, you will be hit, and pretty fast. Probably in the same, if it's like this, it will hit it in the first or the second candle after your entry. So you enter at this candle, you enter on this candle, the second candle, you would have hit it. So 1, 2, 3, third candle, sorry. The second one almost took your TP, but 200 ticks is something huge, guys. 200 ticks is, some people probably trade the whole week trying to get 100 ticks. Okay, this is 200 ticks, and it gave you 0 drawdown. That's one. Two, how we can play this to be safe is at 100 ticks. At 100 ticks, you either take a partial, or you close your trade, or you move your stop loss to break even. If you plan to continue the trade, you must move your stop loss to break even at exactly 100 ticks. Okay, and then you can run to 200. 200, you can close your trade. I recommend you 100% to close your trade. Don't be greedy with it. And that's it, okay? But you move your stop loss to 0. And this is not just because it's easy to say, easy to work with. No, there's a actual knowledge behind it. Not knowledge, there's actual reasoning behind it, and that is the fact that if the market comes to 100 ticks, okay, if it comes to 100 ticks and it starts reversing back 100 ticks, then you can start to know that if you can start to feel that the market, okay, if the market is really bearish, it shouldn't be dumping 100 ticks and then pumping back the 100 ticks right away. You shouldn't do that. Why? Because it just shows you that, okay, the momentum for bulls are strong because they dumped the market 100 ticks, and 100 ticks is not something small, guys, and they pumped it back 100 ticks. To do that, it means that, okay, we're wrong about this trade, and it's most likely to continue going back up, all right? That is just something I've backtested for a lot of time. And yeah, so you can see here at the 100 ticks, it didn't come back to break even. It continued going down, right? And still, we didn't even get stopped out. Like, not even break even, not stopping out. Our stop is right here, but we put our stop loss at break even, and look, you can catch this whole move. But again, I don't want to be, what the hell, 1,300 ticks? That's a lot. But let's be realistic. None of us gonna hold all that long. Now, so, now we can turn off the price action one. I can't speak, guys. I'm really sorry. I'm learning German, and German is fucking up my English, my Arabic, and my Turkish. So I can't even speak right now. But let's come back to this. So, sweep of previous session low. Step 2, charge. We have a bullish charge. Step 3, we wait for FPG. Do we have an FPG? Yep, right there. Okay. Of course, it's not showing because we mitigated it right there, but there's a small FPG, right? See it? Right there. Okay. So you will enter at this candle, charge candle. This is the charge candle. You enter right there. Stop loss at the low, and look how ridiculous our stop loss is. Okay. And now you move your TP, and you're aiming for 200 ticks or 100 ticks. At 100 ticks, you either, like we said, you either close your trade, you take a partial, but if you want to hold to 200 ticks, you must, with absolute certainty, you must put your stop loss to break even. There is no exception to this rule. No exception. Okay? And boom, this would have been a break even trade. You went up to 100 ticks. Look at it. You pumped 100 ticks and it dumped 100 ticks. This shows you that, okay, we're not that bullish. We're actually very bearish. And look, a few candles later, the market just dumps. All right, it's just like it's like an indicator of its own, like we made up. Okay, it's a really strong indicator. The market dumps in your favor 100 ticks and then pumps right back up 100 ticks, or vice versa. So we had a winning trade, short, another short, and a break-even trade. So this strategy is more times than not you get a winning trade or a break-even trade, and sometimes, of course, like any most strategy, you can get losses, and they're inevitable. Oh damn, there's a lot of people in here. So nice one, Mission. What was I gonna say? All right, so now let's go. Now that we did it on NQ, of course you can check. I'm not gonna go through all of them, but you can see this strategy works on any asset you guys like. Okay. Same thing with ES. Sweep, chosh, trade. Sweep, chosh, trade. Okay. The chosh probably get up here. So the chosh is here. Sweep, chosh, PG. Sweep, chosh, PG. The PGs are still intact. And same scenario here. But ES and NQ are most likely to be the same. I want to try to take a trade button. Right now we entered the macro, okay? So I was been talking, so we can finally enter the macro, so we can finally start seeing some movement maybe we can take trades on. But you just don't want a long a dumping market, right? But what I'm looking for, just while I'm gonna explain the next part, I'm looking for right now this 5-minute FPG to be run over. Okay, so we have a low, lower low, or a low, high, lower low. This low manipulate this low. So if we get this candle close above this candle right here, we're gonna get something called a market structure shift, right? So anticipating this is gonna be a market structure shift. And if this swing high that we're gonna be forming or basing our structure shift is inside a BISI, SIBI, or in other words, a bearish FEG, then we can anticipate that this is going to be a high quality market structure shift, okay? So we're already getting displacement. I don't want to take a trade right now, but and we bounce from my NWG, that's another confluence, and timing is right. So we can anticipate that maybe if we close above this, we can take maybe a trade, and maybe target just this high, all right? But I personally wouldn't trade my accounts after a big move like this. Maybe low size, okay? If you're gonna trade this, trade it with low size. I'm gonna just take probably a minute or two. But imagine I'm in 5 micros, okay? I'm just not gonna switch contracts here and then, but if we get that structure that I want, I'll probably take a trade, and you can target a few things here. You have a couple of targets. You don't have any inefficiencies around here from here to this target. You only have this high, and you have the midpoint of this order block and the midpoint of this premium weight, okay? And you have 1, 2 as well, okay? So you should be targeting each one of them, all right? As a target if you want to take the long. But while we wait for that, actually, drop under 1 minute and see what's going on. So you see that the market is dumping, and around here, I don't know what's his name, Colby, he introduced something called squeezing. Okay, you can see the market, the consolidation is getting squeezed. The candles are getting smaller and tighter and tighter and tighter, and then eventually it's going to start moving either upwards or downwards, all right? Hopefully, based on what we're looking for, we can maybe target this high, and all these lows are actually low resistance liquidity. We can actually go ahead and target, but I'm still not too satisfied. You can see on the 15 seconds, market is squeezing itself, like it's getting so intense, right? Just like here, it's getting so intense, and then the market moves away, right? So here's like a original consolidation. The market goes up, it finishes this original consolidation, so as a buy model, and then it will come back and attack this one, right? So it's not like a full-on reversal. It's just gonna come back up, maybe take out this high, and then come back down and attack this formation, which is in work in progress right now. But let's wait on the 5 minute and see what's going on. Welcome. Now, before, I wanted to go over where's these, okay? So let's go into Q. So basically, digital time theory is by someone called Anar. I showed this code a bit earlier. He introduced something which is nice. I like it. It's not. I'm still testing it. That's why I don't want to give too much information until I can prove it's actually worthwhile. But basically, you guys know how when there's a market, hold on, we're about to get a trade here probably. You guys know that I tell you, wait for the macros. Why do we wait for macros? The reason is, it's because there's distortion, there's time distortion. Okay? What's time distortion? It just means that the market is inefficient in what it's doing to offer people who are very rich the opportunity to get back into their trade. All right, so if we're bearish and still not many people of the big boys, deep pockets that we don't know of, didn't have time to enter, then the market will time distort. It will just distort time. And what that means, I'm just using the same, I'm using the word to explain the word itself. Sorry about that. We're literally delaying time or just wasting time until wasting time to give the opportunity for some big players to enter the market. Okay, so example here, which is consolidating, allowing distorting the time so the smart money can enter the play, and then on the right time, the market can efficiently start moving. All right. What times does the market start moving? According to ICT, the macro times, right? So top of each hour. So if you have 10 o'clock, it's going to be 10 minutes before and 10 minutes after. If you have 11 o'clock, it's going to be 10 minutes before and 10 minutes after. So 9:50 to 10:10, 11:50 to 11:10. All right. However, what's his name? Anar, he did some backtesting and found that, okay, we can pinpoint to the minute when this distortion is going to finish, even though it's not a macro time. So just like a macro time, but the macro times are specific times, like 10 minutes before and after each hour. But there's other minutes inside the trade, inside the chart or inside the hour where such distortion will start taking place. For example, you can see that the market here, we're just distorting. If I go on the 15-second, you're going to see the same thing where it's there. You can see the market pumping, dumping, pumping, and exactly at 12:35, this model, and this labeling is weird, like Bishop. Like, don't worry about the names, it's just weird ass names. But you can see that at 12:35, now the market started making them. Okay. Likewise, it's 11:10. 11:10 is here. After 11:10 finished, the market started going up, and then it comes back down and uses it as support, continuing back up, and then eventually continue going down. The 13:30 model, well, you can see it starts moving right away from that time. But this timing already, we all know that it's when the market resumes, the algorithm resumes its function, right? So there's supposed to be some kind of volatility, right? It's after lunchtime, it's post lunchtime. So there's some volatility. So this here is something that helps you or differentiate like whether this theory is actually plausible or not, you know? Because sometimes like 11:10, P. Jones uses this time every single day religiously, okay? And it works every single time. This is just lunchtime time. 4:10 is another macro time according to ICT. You know what I mean? So there's something, let me continue testing, but so far I'm getting some nice results. Yesterday we took live trades and they were beautifully executed. So I'm getting some nice testing, but once the next lesson we do, I'm gonna go into this in deep, and if the testing results I'm getting maintain themselves in a good way, then you guys are gonna have something really nice to enjoy. But now let's come back to our trade. And you can see market is still distorting. So what can we use? For example, we can use any of these models. So right now I don't think there's any more models, but there's timings like macros. If I toggle these on, you're gonna see lines at every single minute. For example, 10-12 minute, there's gonna be something there. There's gonna be reversal. There's gonna be another thing. There's gonna be a power free displacement. There's gonna be a market structural shift. There's gonna be a time distortion there. So at each of these times, but if you take every single, like if you pay attention, if I turn all these on, you're gonna probably see a line on every single candle. Well, more times than not, at least one is gonna hit, right? If you throw 10 balls at a wall, one of them is gonna stick. But let's give the guy the benefit of the doubt and still be waiting for our structure. So right now we can see that market is still time distorting. What is it waiting for? Look at this. You can expect that there's gonna be this squeeze or this consolidation is gonna pop up or pop down very soon. Okay. So what are we waiting for? Well, let's have a look. So right now it's 1525. 1525. 1525. There's only one thing left, and that's 1545, which is literally the macro end. Macro and close macro. What else is there? Is there anything else? Again, there's only this one, and there's nothing at 1545, unfortunately. But if we go back in a 5 minute, I haven't spoken my shisha. Why did nobody remind me? For example, today in the morning, we took this trade. Okay, where is it? Okay, so I have to go on the 1 minute. Just want to show you guys something. So I took this trade, I think was CY. where is it, right? In Asia. Yep. You can see that at 1807, this candle right here, 1807 candle, it used it as support, resistance, and finally, before the market starts pulling, this is where it did it, all right? And you can see that at this timing, at 17 o'clock, I think, 1901, so exactly at this line, if I turn this on, you can see exactly when this line touched, when this model, which is the 1807 candle, combined with the time, I don't know if it's going to draw it for me, but the 1901 time. There you go. At this moment is when the market starts pulling up, okay? At this moment. So that's something nice. I wanted to trade here, but I didn't. Then the market came here, Osaka model, and same thing happened. You can see this is the candle. It used it as support before spooling up. When did it start spooling? You can probably find the timing thing somewhere right there. 926, 926, and there is 914. So 926. Somewhere around here. Anyway, I don't want to get too much into that, but I want to see one more thing.
Yeah, look.
Yeah.
At 7:15 p.m. every night and 9:15 p.m. every night, 11:15 p.m. every night, there's a move. And I bet you they'll probably have them in here, which is the one that you picked up at 19, which is basically 7 p.m.
Yeah.
And if you look, and you look at 21, and you look at 23, I don't know if they're listed for you in here.
21, there is 21.
15. So it's always 15 minutes. So it's the 15 minutes right after the hour start. This is where basically they start kicking in. If there's a move is going to happen.
Yeah. That is sick. Yeah. What about this one here? This is 12.45. 9.45. Yeah, nice, brother. I'll backtest. I'll backtest that. Sure. Every hour 15, you know? You try to say. Awesome. Okay. All right. So yeah, I tried to take this trade here from the Osaka model. Hold on, my bad. I took a trade here. I was targeting this low, okay? And you can see in the screenshot in the chat, I had my stop loss exactly below this line, and I had my TP right here. It went up like this, went down, stopped me out, and at the right time, it went up, took up my high, and then just continued going up. It was disgusting. Anyway, now let's go back to our trade. So you can see market is still distorting time. Anybody's going to be go long in here is going to get stopped out. Anybody's going short is going to get stopped out. Anybody going longing on, everybody who's going to be going long, they're going to get stopped out. And it's going to keep doing that until the time is right. These digital time theory offers us some times where the market will likely to reverse. From this point onwards, I don't see anything except this line here, okay? Anything else I can see here is pretty much nothing, right? There's nothing here that can help move the market till the 45. So we might have to wait 15 minutes until we actually get that break in structure and we can take our trade. Okay? So this is how you can keep yourself patient, right? Because you know, market is distorting time. If it does like a big move like this, then I'm like, oh damn, I missed it. I was waiting. I'm so patient, and then it did it without me. It's not gonna do that. It's gonna be distorting time until the time is right. And I think the earliest time is 15:45. So we got about 14 minutes left. And if we go back, is there anything here that can use spot price? Pretty much nothing except that NWG. So what you can do, if you just don't want to miss out the move, I want to take a risky, you can take this, send out, or even this. This is the whole thing. Any of IFVGs, okay? And here we have a bearish one and a bullish one. You can take an entry here like this. So I was going to take it so we don't miss out this move. You can put an entry here, small size, and then add into your position when the time is right. Okay, so you can do it like, but you have to be extra patient. Why? Because you have to expect the market to go up, down, maybe even stop you up, but continue doing that and make you piss yourself out so many times. Okay, that's one way you can do it, and that's what I usually do. I don't do it on the lives, but when I'm trading, we have a low, lower low. We anticipate this could be a breaker block. So first, if I see this one, I will be entering there. Okay, damn, I wasn't able to catch this. But this is what you're going to be saying to yourself. Damn it, I missed it. I had the right idea, I had everything, but I missed it. It's okay. Right now we're on the 1 minute, so this looks very nice. But when we go on the 5 minute, we're gonna get actually our play. So here we're gonna get Chosh. Are we? Gonna get Chosh. We're supposed to get Chosh here, right? Damn. The minute there. I'm using that thing. We're supposed to get Chosh here. Why am I not getting Chosh? Oh, there it is. Why is it so dark? Oh, there it is. Okay. So now once this candle closes, we can probably take a trade. Okay? But we have to be in a trade before it targets the midpoint of this order block or the high. Okay, so let's go back on the 1 minute. Alright, so it's 5 seconds left. Go ahead and draw our thing. The value gap, and we can go ahead, take an entry. You see, you're gonna be chasing it, and it's gonna do this move, and it's gonna scare you out. So it's okay. Let it do its thing. The reason we do 5 minutes is so it does these moves to scare anybody who's trying to long or short, and then it will just run on itself. But now it's moving. We can take a trade exactly when the candle closes, but I prefer to being here. So I would wait for this candle to close and then drop down a bit. I'll buy the first drop down, so power of 3. But it already hit our first target, the midpoint of this order block. We have 12 seconds. Let me see if I can draw this in 12 seconds.
ES got 2 candles in charge, one at 255 and one at 310. So these little 2 baby candles.
Nice. I'm going to check AS in a second, but I just want it to drop down. No, it's not going to give it a drop down, right? Is it? Give it a drop down. I'm just going to enter here. I would like it to go down first. Not manipulate. Power 3. This down, open, manipulate, and then distribute up. We'll add another one here. And we can put a stop loss here. And that's 1K, so we'll probably allow to take it. That means we cannot take this trade. If you're on a top step, you cannot add one more contract. Your maximum you're allowed to lose is 1K, so like this. A new TP would be, first TP would be this high. But you have to pay attention to this level here. And what else do we have here, guys? We have multiple things preventing us from taking this high. We have this order block midpoint, which we entered, which is not something nice, but still, this is based on our strategy. We have to take a trade. Second thing is the midpoint of the order block. Well, I already said that. Midpoint of this wick. And third, we have this rejection block. So you have to take a partial at each of these levels, right? I wanted to go much more contracts. So that's why when you go into micros, so example, you go on micros, take 10 micros, you take 5 here, 2 here, 1 here, and leave 1 to the rest. Okay, that's how you can do it. So you have objections coming your way. Now let me go into ES and see what's going on. What's the charge candle you said, brother?
255 and 310. We don't know if they're gonna hold or no, but when they come in, they basically mark certain areas in the market right now. Maybe they're not gonna make it go down. They might wick a tiny below it, but that's it. If this is the candle that is gonna hold for the rest of the day.
1410 and 1455?
255 and 310.
Oh, 310. And we're looking at the opening price or just vertical line?
Just the whole candle. Usually I look at the body of it, which basically you don't have a body, but I would monitor that one.
Okay, so we're looking for some sort of support here.
As long as they hold.
All right. Well, that's where our stop loss is.
Okay.
So right now, we're approaching our first TP. So here, if you're in 10 micros, you would take your 5 points, 5 micros off here, and then 2 here, and then 1 more here. I'm in one contract, right? So if any of these targets get hit, we can just call it a day. In fact, if it comes back to break even, I can go on like min Q just to show you how I'll play it. So all right, so like that, you would put 5 at here, put 5. Well, they're almost the same. So like here, 1 tick below, you can put actually look, you can 1 tick below, and you can put another, for example, 2 at the rejection block, and you can put and you can put 1 eventually at this high. Okay, or if you want to hold a runner, then that's up to you. But like I said, don't be greedy when moving market like this. Be thankful that the market is delivering you some money, right? You just made $200. Now, if we go back on NQ, we can see that the same thing, right? But here, I have to close my trade if it touches this line. I have to close it. I told you, midpoint of order block of wicks, you have to close it. However, since we played this wick already, I presume that we can maybe put our TP at the rejection block. Okay. You see, even though I'm tucking in this high or maybe this high, I have to close my trade here. There's no exception to this rule, guys. Okay. Now let's go back to MNQ and you see how much further room. We're literally making the same money, same entry, same exact entry, same exact size, but I can be taking some risk off and booking some money into my pocket. The trader doesn't get paid for spending 10 hours on the chart. The trader gets paid by partials. If you take a partial, you pay yourself. You watch this chart whole 10 hours, 20 hours a day, you're not getting paid. I don't care how many hours you watch the chart. You're not going to get paid until you pay yourself with a partial, right? It can absolutely come to this wick and dump down. It could come absolutely to this rejection block and come down. Okay? So keep that in mind. And where else stop loss to them? Stop loss like here. How much will we be making? About 228. Put it down. Oh wait, hold it. It's much more than that. $500, I think. We can be making 457. And now we're almost about to touch our first TP. And on here, probably we already hit it. So right now, I'm risking 1K. Okay, my TOPSTEP allows me to risk 1K, for example. I'm gonna secure some partials, and that's it. Pay myself. And there we go. First TP, second TP hit, and one more left. Why are we still in 3? Oh shit. Still be 3. And now you can see when I took partials, my stop loss dropped. Right? Now I'm just risking nothing. You can move, of course, to break even like this. But now you're only risking 300 and you paid yourself. Okay? So what you can do if you want to keep your stop loss down below, you can just keep it at 300. Not 300. How much profit did you make? We're supposed to make $450. We made about 300. So maybe you can like risk $100. Okay? This way you don't put your stop loss at break even. But if you get stopped out, you will still be $200 in profit. Even though your profit is minus 100, but you're up to 100. So you'll be up $100 already. Now let's go back to NQ. On NQ, we're already out. Okay, we made our money, we're done. We are OTP. You see how the market went straight to RB and started rejecting from there? I'll go on the 1 minute. You see, guys, you're targeting this high. Market came to this RB. Nobody's paying attention to this RB, and now it's starting to space down. Okay? There is rules to this game. You have to follow the rules. I just told you the rules. We drawn out potentially where the market may reverse, and we paid ourselves. We said the first line is it loads. Midpoint of this wick and the rejection block, and you guys are TPing here. This TP here is not gonna it's probably not gonna hit, right? Probably it will hit, but I'm not sure. I already paid myself 7 contracts, and I already presumed that the market is gonna reverse from this rejection block. Remember, I drew a rejection block right here. This is what I did. This is exactly what I did. Okay. While everybody's longing, yeah, finally we're getting this pump, we're getting this placement. Oh my god, we're aiming for this high. Guys, you have to pay attention, okay? Eventually, it will go back to your TP. But you would anticipate a move back down, maybe into this fair value gap, right? Or maybe you're late for the game, and you'll be like, damn, it's going to run to the TP without me. Well, anticipate a rejection from the rejection block, as the name implies, into where? To this FVG, and then you maybe can get your entry again. If I wasn't explaining, I would have added the same 7 contracts back into its position. I would add the same 7 contracts that I took off in profit. I would add them back at the same exact entry, and now I can let this and do the same exact scenario. I'll take another 5 here, 3 here, and let another 2 run, or 2 here, and then let another 3 run. Okay. That way, if I'm making $450, now I'm making $900, risking the exact same thing. But I paid myself in case the scenario doesn't play out. Okay. So if I go back in 1 minute, rejection block rejected. Where did it go? It doesn't just reject to a random place. It rejects to this FPG, and as you can see, right down the sessions off, you can see. To the thing, this institution order flow entry drill. This is a valid institution order flow entry drill. Why? Because this high is not taken out. If this wicks the high and comes back down and does a similar move, I wouldn't trust this FPG. Okay? And now we're probably gonna hit our TP. Hopefully we do. Now look, in 30 seconds, this high should be taken out. In 40 seconds. Okay? The macro, the time is right now. Okay? There you go.
Took half off from 52.77 and a quarter. 78 and a quarter, I'm sorry.
On ES.
Yeah.
Nice, brother. Well done. ES is lagging below though. All right, two seconds left. 2 seconds left. Did we hit TP? Oh. 2 seconds left. It should run to a high. Okay. Probably this high right there. Or it can come back to the midpoint of this wick. This fair value gap is still valid because this high is not taken up. Okay. If you're late to the game and the market dumps here on this macro, you can probably find yourself another entry and can be entered to the game. Okay. Notice how the bodies of these candles are respecting the midpoint of this wick. Who in the world is paying attention to this wick? It's all game. It's all past, right? Past tense. It's your X. Who's looking at the X, right? Well, this here, the algorithm is looking at the X. Algorithm loves their X's, okay? Just think like that. It loves its past. Everybody's paying attention to this order block, this high, these relative equal low highs when you drop on the lower time frame, these as well, and this fair value gap. But nobody's paying much attention to these big wicks. So we're expecting, for example, price to come back here. I can maybe add another contract here, like I offloaded. For example, I can add 1 more back, right? And if I get stopped out, I'll still be in profit. Okay. Let's see. But I want it to move up. Always keep your TP 1 tick below this. So here, this wick is important. Institutions high frequency traders will use this wick to buy into their trades. As you see, we tapped in, bumped that back up, opened up in the 1 minute and follow what's going on. I don't want us to close below the midpoint of this wick on the 5 minute. Okay? There you go, in space up, can go back on the 5 minute. Beautiful entry. You see, sniper entry. You can do it, and you can close your trade right here. For example, you enter here, like heavy size, and you get out here, and that is instant. Almost 30 ticks, 20 ticks, right? So that's $100 with one contract. Or if you're in 5 contracts, that's $500. You can play those. Those are risky, but if you know what you're doing, you can benefit greatly from them. Hopefully, we can just take out this high so we can end this stuff. And in this case, I can just do this. So we're gonna make additional 400, right? If God allows me, I would be not 400, 170. Any questions so far, guys? I'm straight 0.5. Nice one, TK. Still waiting. So when you get a big wick like this, split it into quadrants again. High frequency traders will play this until they're satisfied with it. They'll play, like right now it looks like a single wick, but if I go on the 15 second, you can see that they're playing from level to level. Here's our anchoring point. You can see they're taking from level 0 to the midpoint, to the 75, to the 100, go up, back up, down to the 75, almost to the 25, back to the 75, to the 100, and they're benefiting. They're making money more. They're making more money in this here, in this area here, than from the actual drop down. Okay. So now we can go back on the 5 minute and see what's going on. And there we go. There you go. Thank God. Hopefully. And now, just clean our chart a little bit. I don't like messy charts. No. And now we disrespected this energy. Close above it, then we can eventually call the high. Okay? But we want to close above this. That will give us the confirmation. Bearish order flow is being bullish. Bearish order flow is being disrespected. Right now, it's being disrespected. I want it to close above it in this same candle or the next candle. I don't want it to do this kind of wicks inside this bearish FVG. Okay? I don't want to do it. I don't want it to do that. I want to at least close above the midpoint of this wick, of this order fair value gap. There we go. There we go, guys. I thought I lost the connection for a second, but there we go. We have our TP. So, in Oliver Velez's was it voice, where he's like this, he goes complete silence and then boom.
Watch 52.93, 95 if they reach out to it or they break. 52.93 or 95.
52.93. What's 52.93, brother?
Well, these were the whales. They were hanging around. That's why 52.
Sorry. I was thinking of time. You're talking about.
No, I'm talking about price.
Price again.
52.85 and 95. They are the whales, and that's why the market kind of like hanging around here for now.
Nice. All right, so we're out of this trade. And remember, guys, we said at the start of the stream, this area here is low resistance liquidity run. Okay. Right here, people are going to be using it as resistance. We're going to be targeting it. Okay, we're not going to be a breakout trader. We're not going to be a breakout trader. We're just going to target the liquidity here. Instead of being at a high, like a vertical line, sorry, a horizontal line. Instead of being a horizontal line, this liquidity is a vertical line. Can't speak, man. It's ridiculous. It's an oblique line, okay? Like this. So we took it. That's it. The market can absolutely reverse from this point, okay? But we took our objectives. We took a beautiful trade. We waited for the time. We waited for everything. Guys, I showed you guys how you can institutional order flow entry drill. and how you can use wicks to buy into candles, right? So where is it? Drop the 5 minute. Yeah, we bought into the midpoint of this wick. Institutions is how they buy. Okay, so if you're late for the game, if you're not getting entered at the FPG, you can use the midpoint of the wicks as an entry way. So what this means is market opens, power 3, open, manipulation, distribution. Okay, it manipulates down until where it's not going to go around in place, it's going to go to the midpoint, and that's why you can be buying. So you can be doing this for the exact same thing for every single candle. This big wick here, when this candle open goes down, you can buy at the midpoint and then target the next area of liquidity. This here went where? It went probably to this wick's midpoint, right there. See? And now it's going to play the same thing until the market close before this high gets taken up. All right. Well done, Sean, brother. TK, show you once that once changed. Can you please show that once changed? You mean change like Josh? All right, so we have a low. We have a lower low. When price comes above this high, if this candle closes above this high, this becomes your break-in structure. But if you want to be extra spicy like we are, here we have a low. We have another low. So we have a low, high, lower low, higher high. Okay. So breaking of this swing high give you a chosh. Okay. Why is this valid? Why did we break this swing high and we got a chosh? Right? Because this swing high, people who have been longing, they got stopped with stop loss here, they got stopped out. So the manipulation already happened. So you can think of it like there's an accumulation. It manipulated anybody who's going long, and now the algorithm is going to go without them. Okay. It's a really bad scenario here, but if I go here and show you from Lux Algo, you're going to see Josh here. Okay. It uses this swing low, and now we're above it, we're getting a Josh. All right. So this is a confirmation Josh because this is actual swing high with a lot more liquidity than this, just this low high and lower low. Okay. For the Japanese models, I'll have to again study it better, but I'll teach you guys very soon. Right now, there's no any more models, but while you're trading, you can use these. Look, the only thing I can tell you guys is these models, these timings, these candles can be used as hidden liquidity. Right? So if you're long, let's say you're in a long, you're targeting this audible fair value gap, fair value gap, fair value gap, and this high, you can target this as well. Or you're targeting this high, you can take partials at any of these levels, okay? They will track the price. So any questions, guys? We took a nice trade. We think still have 5 minutes till the market closes. But see, it teaches you patience, just waiting for the right time. Noticing this here is a good sign because this means the market is gonna pump with them. All you have to do is just wait for a structural change. If we get a bearish one, we take that one. If we get a bullish one, we take that one. But that's not how it works. Okay, it's not a 50-50 game. You have to know that we've been bearish. Okay, if you go on the 5 minute, let's just fix some thingy. All right, so you can see this is the first time we're getting a chosh. Okay, after this whole day. I mean, we got that one. We made $100, not $100, 100 ticks, but we got stopped out break even. But this is for the PM session. This is the first time. This should show you some significance that, okay, the market is chilling after a big move, and now it's ready to do some maximum carnage or maximum pain to anybody who's been short and trading their stop loss, right? Anybody who's short is not going to keep their stop loss here. That's ridiculous. I wouldn't. If you're shorting and you profit, you're not going to keep your stop loss here because right now you're probably up 10K, but if it goes back to your break even, to stop loss, now you're down, now you're back to zero, right? So people are going to trail every single time. They're going to trail at least to this high or this high. This has been taken out. This high is almost being taken out. And that's probably how we end the day. Huh. So today we're up. We took this trade together. 50, 300, 67, 107. And you're up 687. Ease of mind. We didn't do literally any magic. We didn't do anything advanced. We just waited for the time. We waited for a structural change. We identified what the market is likely to do at specific areas that may hinder our take profit. So we entered here. We know that there's a rejection block here. We know there's a midpoint of order block here. We know there's these wicks, which are more important than the swing highs. Retail will put the stop loss at swing highs and swing lows. Institutions will put it in the middle. Okay. So right now we have swing low, another swing low. The high spring candle in between is your breaker block. This is your breaker block. Once we close above it, now we can expect that this to hold price to maybe at least take out to this high. More importantly is the midpoint of this breaker block. If I go here, but midline, you can see that price is respecting the midpoint of this breaker block. Right. Okay. We do not want to see price closing below the midpoint of this. It can weaken, and if it wicks into this fair value gap, then we have a what? Unicorn model, which is the strongest entry you can ever get. Okay. So you can put maybe limit order here and then target the high. But at this late in the day, I wouldn't trust that. Yep. Is it the top indicator, premium indicator? Yeah, it is private, and you won't find it. Even if you search it, you won't find it. But exclusive Luke, he probably hates me. I keep requesting stuff from him, but he's amazing. He's coding us the same indicator, and I'm gonna release it for you guys. Okay? So you guys don't have to pay shit for it. The exact same thing. So let's all motivate him so he does it. Everybody say exclusive magic. Do the best, and he will probably do it. You're welcome, PK. Any questions, guys, before I call it off? Like, we probably did an hour now. Nice stuff to learn. But let's see what happens here. So you can see how the midpoint of this order is respected to the tick, And when I say tick, I literally mean please be a tick, please be a tick, please be a tick, please be a tick. Come is 3 ticks. To the 3 ticks. And again, this way is where we can buy yourself and then target a high. Okay. So let's see. Now market closed. Well, there's still 7 minutes technically, but at 16 o'clock is where market will probably do a big bounce or a big dump. Pay attention to the opening price of this. This is an order block. But would it be respected? Let's have a look. From here to here, this is equilibrium. This is equilibrium. This is discount. This is premium. This here is a bullish order block in premium. So you should not put your faith on this, even though it's working. But you shouldn't put your faith on it that much, right? So play with it, guys. Play with it. You're welcome, Pete. Any questions before I end this, guys? Are you guys learning? Is it useful? Is it beneficial? Is it bullshit? Am I talking BS? Am I wasting your time? I really want to take a trade here, but I don't. I want to end the day with $700. Don't pay it. But see, like there's some people feel with the trades. Don't take a trade. You made nice profits on the accounts. You're welcome. No, look, the lights go, bro. You're welcome, brother. You're welcome. You're welcome. You're welcome. You're welcome. You all of you owe me some shisha. Okay, I'm gonna take a screenshot of everybody in here. I'll be taking 3, 4, 5, 6, 7, 8, 10, 10, 13, 14 shishas. Thank you very much. All right, see you later, guys. Peace.